2, 1, roll the footage. Welcome back, everybody. I'm Simon Severino, your host, and today we talk crypto investments in the age of autonomy. And as you know, crypto is everything we don't understand about money, plus everything we don't know about computer sciences. And today, my guest is one of the rare people on this planet who really is an expert in investing, and he has a degree in computer science. In fact, he wrote an article called Intrusion Detection with Neural Networks, which has over 700 Google Scholar citations. So we might learn some stuff. He's also the founder and CIO of crypto hedge fund TRADECRAFT Capital, and he's the author of an amazing book called Crypto Assets Investing in the Age of Autonomy, which is a very practical book that was one of the best books that I've read last month. Welcome, everybody. Jake Ryan.
Thank you. Thanks to be here.
So cool to have you here. And tell us, what are you currently creating?
Yeah, well, right now I'm creating some software inside my fund. So I run an investment fund, and I take in investors, and I'm out there investing in the liquid crypto markets. And so one thing I do is I build custom software, custom proprietary software that we use inside the fund to help us analyze the crypto markets and to help us make determinations on how we should invest, how we should express our thinking inside the markets. And so lately I've been working on that software a lot because we've just upgraded the software. And so I've been working on that a lot.
Cool. And I have to plug your book, Crypto Assets Investing in the Age of Autonomy, because I've read 5 books about crypto in January, and yours was by far the most practical and the most, it says basically, people, these are the asset classes, this is how you build a portfolio. In general, this is how you select your assets, and this is how you create a system out of it. Because, do I understand it correctly? In your philosophy, becoming a good investor is something that takes time, and it should be a system of decision making?
Yeah, exactly. So when you first start investing, a lot of times emotions will drag you into action. And a lot of times you'll act when you're greedy, and you'll buy, and you'll sell. You'll buy instead of sell. And sometimes you'll be fearful and you'll sell instead of buy. And so one of the things to become a good, consistent investor, to generate, good returns over time reliably, is to build systems, because you're removing emotion from the whole process. And usually emotion is what gets you into trouble. And so, so I helped build systems to evaluate, what does the landscape really look like? And then I adjust a portfolio based on that. And I'm just using systems so that all my emotion is removed, from the decision-making and implementation process. So, yeah. And I love that you like the book. That's really great. It was really important, in my opinion, to be a really good innovation style investor. You've got to have conviction, right? If you're not really convicted in what you're investing in, then you just don't know. You might easily sell when you shouldn't, or something like that. And so the book helps just lay out a foundation for why we're in the next long wave economic cycle. Some of us who are like Gen X, they remember the 90s, they remember the internet, and there's a lot of similarities between what's going on now and what went on then. So the book kind of takes you through the idea of this next long wave economic cycle. We put a name to it. We kind of describe and distinguish why and what it is. And then we kind of tell about the past long wave cycles that we've had, so that we can kind of relate some of the past to explain the history, the future.
What are in your book I learned also that everything is waves, long waves, mid long waves, short waves, but everything comes and goes in waves. Is it the same as S curves? What is a wave?
Yeah. Anytime you have human behavior, you're going to have a wave. Okay. So if you have human behavior in the form of credit inside an economy, you're going to have an economic cycle. If you're going to have credit inside your money system, you're going to have a money cycle. If you're going to have an economy and it has people operating in it, then you're going to have an economic cycle. So cycles become because of psychological human behavior. Um, and a lot of times when there's credit, because credits create waves, human behavior create waves. So that's why.
And right now, which waves are shaping the crypto market most?
hmm Yeah. Well, we have several types of waves. Right now, we have a short wave credit cycle. Credit cycles are those, 10-year cycles. You see central banks and the Fed raise and lower interest rates. And when they do that, it has an effect on the economy. Then the economy has a growth number that happens. And then that growth number plus the inflation number plus interest rates kind of set how an economy does. Then central banks, change interest rates, and that cycle goes for about 10 years. The second one is the long wave economic cycle that we're currently experiencing. I assert we've had evidence of it going on for about a decade in the form of artificial intelligence, AI, IoT in the form of sensors and robotics, delivering on automation. And that's been powerful. It's been profitable, but it really hasn't transformed how businesses operate. Um, the last piece of that puzzle is crypto because it allows us to store, process, and transfer economic value without human intervention. And so as these technologies converge, we're able to build autonomous operations or autonomy. And autonomy is very powerful. Businesses that do not have autonomous operations, they simply won't be able to compete with those that do, because autonomy really is the ultimate competitive advantage. And so it's going to transform how we do business. You can think of the age of the industrial age. It pulled everybody out of the farms and into cities to work in factories. That was a huge change. During the internet, we were able to speak to anybody globally, and we built big disintermediation companies like Uber and Google and Facebook and Airbnb, and they're all two-sided markets that that the entire world and how it operates is transformed. Well, we are going through a new cycle that, what was powerful about the internet is that you could send a file, a piece of content to 3 billion people for free, right? You could communicate with the world for near free. That's amazing. That's what happened with the internet. Well, what's happening now is we're able to put actual value inside a digital file, and now the file is valuable. Okay, we never had digital scarcity or natural scarcity in the digital format before. We never had that before. Now that we have actual value in a file that we can transfer around the world, what is possible now out of that? We have legal contracts in the form of we write them down on paper, and then if it gets really, really bad, we sue each other in the form of a lawsuit, and we take either we negotiate it out, or we take years and go through the legal system to get a determination. Well, now we're starting out really, really small, but we're able to program legal contracts or program economic contracts such that human intervention isn't needed for that little contract. Now, we don't have big complicated business contracts in smart contracts yet, but we've got these little ideas of like invoicing or many other little ideas that we're able to do. Send money or send economic value if something happens. And so that's transformational, and the whole world is going to be really transforming over the next 4 decades.
that's the age of autonomy that you describe. It's not just the autonomy that we can own assets, it's really autonomy in terms of operations and economic value exchange that happens without humans, right? So you have an example.
Yeah. So so what's happening inside the age of autonomy is digitization. Okay. So if you think about how the old way worked in the internet age, you would go up on a website like Amazon and you would order something and it would come to your door or something like that. And the whole process of that was getting humans to use digital things, and then something would happen inside that digital thing and you'd get some economic value back in the real world. What's happening now in this one is digitization. And what you've seen is, and what happens in digitization is that we try to get the entire world and explain it inside software and then spit that back in the software to have some sort of thing happen in the real world. Okay, what are you talking about? Okay, well, if you think about Uber, it has systems that pull in the entire universe in forms of geological maps and then uses those maps with AI to figure out where drivers and customers are and figure out the optimal route and figure out where to have a car show up and then a user use the car and then a credit card is transacted and then people leave. Okay, that's what's happening right now. What we're going to disintermediate Uber. Okay, we're going to have smart contracts and DAOs and software that does everything that Uber does, but without a company. We're going to do that inside smart contracts, inside crypto, inside these things called distributed autonomous organizations. This is how we're going to come together and gather as humans inside this, digitized world. And so how we operate is going to fundamentally change over the next 4 decades.
And so the smart companies will tap into that, and like an energy source, like having 40,000 employees, but there is no employee there. It's just a software.
There'll still be employees. The employees will still work. There may be less, or we may come together and come apart differently. We're still going to have humans, and obviously still going to participate. We're just going to participate in the world completely differently. It's just going to transform how we do business.
Some people say DAOs are the future. Other people say you need somebody leading, otherwise nothing will come out of it. What's your observation of the nascent DAO world?
Yeah, I mean, both are true. DAOs are the future, and that's how we're going to organize. And you need a human to do leadership, right? It's not like, but it's just going to change a little bit over time. In the beginning of the age of autonomy, we're going to need more and more participation inside a DAO to get anything done. Over time, we're going to have more things mechanized and autonomous and less need for humans to intervene. But that just gives us as human beings and more capacity to do other things, less rote tasks. Just because we don't use a spoon or a shovel to move dirt to make a road, that doesn't mean humans aren't fully expressed in the world and doing economic transactions in the world. It's just that we've had innovation and technology enough that we've got big bulldozers and big whatever technology to help advance that. And so, that'll affect in the beginning, and maybe it destroys jobs in the beginning, but overall, over time, we're going to create more economic output, more productivity. People are going to be more expressed. The poor are going to have a much better, what we consider poor is still going to be much, much better than it was, 50 years ago. It's just change. And that's just how it happens.
I'm so curious, which books actually inspire you after one word from our sponsors?
Hey, if you like the tools, go grab them for free at strategysprints.com/tools.
So authors are also readers. Are there books that inspired you recently?
Absolutely. I can think of three books over time that have been very, very instrumental, and then I can try to think of some ones of late. So, in the world of crypto, I think two or three of the most important books were for me the Little Bitcoin book by Jimmy Song et al. It's about a 73-page book, super small, called The Little Book of Bitcoin. Super interesting. Lately, one called The Fourth Turning. It came out probably in the late 90s and really explains what's going on, uh, and that there's a 100-year cycle, and we're in the fourth turning of that 100-year cycle. Very interesting. Came out in the 90s, late 90s, maybe 2000. And then Carlota Perez's book, Technological Revolutions and Financial Capital. Um, that was a big influence and some work, a body of work that I built my book, on top of her economic work, which was built on Joseph Schumpeter and Nicholas Kondratiev, who were economists back in the 1920s and 30s. So her book came out in like 99, 2000. So, and then Rich Dad, Poor Dad, and what are some of the other books like Anti-Fragile by Taleb, and The Fiat Standard. I don't know if you've read Saif Amos's latest book, the Fiat Standard. Stealing Fire by Kotler. So yeah, a lot of books.
Wow. And I've seen somewhere some numbers of your work, of your impact, the portfolios that you manage. What was the number of last year? You did over 400%, 400 something percent growth. Is that correct?
In size, yes, we did about 133.1% in performance in 2021, and so that'd be Bitcoin like 120%, something like that. Yeah.
And so when you're in our community right now, people are discussing, oh my God, segment rotation, risk off, value, not growth, commodities, diversification. And other people say, come on, people, let's look at on-chain, look at tech, look at adoption. Let's stay with our conviction, all crypto. What's your perspective?
Yeah, so I think all investors should have many asset classes and a diversified portfolio. I think in terms of the crypto markets, there's Bitcoin and everything else. I think generally speaking, we are creating, in the age of autonomy, we're creating two types of value. We're creating monetary value and we're creating utility value. Monetary value doesn't get created very often. Maybe 5, 6 times in human history, have we created monetary value. We are taking and creating monetary value in the form of cryptocurrencies, and most specifically and mostly Bitcoin. Bitcoin is mostly the one creating new monetary value. Then there's everything else creating utility value, like Ethereum and others. Everything else is creating utility and utility value, and that's going to be more risk on. That's going to have to do with productivity. That is investment or speculation into future productivity, and it's going to correlate more with like risk on assets like equities. So you're going to want to have a total portfolio, and I think you're going to want to have commodities and bonds and stocks. But because crypto is in a certain part of its adoption curve, if you've read enough books and you know what you're doing enough and you know how to handle your emotions and conviction, it makes sense to have a lot in crypto, because if you have a longer time horizon and you know what's going on and you have the conviction, then it makes more sense to have a lot more crypto, because it's so perfect in its adoption curve. The rate of change of users is going up. Not only is the number of users adopting crypto going up, but the rate of change, because of where we're at in that S curve, is also going up. So it does make sense to have a lot exposed to crypto, but you need to know why and what you're doing.
Regulatory risks. The SEC is now looking at everything non-Bitcoin. Bitcoin seems to be, what do they call it? It's not property. It's
property and a commodity. It will probably be under the CFT, it's considered kind of like gold or something like that. It's considered a commodity.
So check. But everything else is SEC territory. And they said, okay, 6,000 of you.
Ethereum is a commodity as well.
Is it?
Yeah.
So Ethereum and Bitcoin are the safest right now from regulatory risk.
I'm not a lawyer or a regulator, but yeah, my opinion, hypothetically, would be that, yeah, Bitcoin and Ethereum would be considered commodities. Everything else has some regulatory risk. I think the area, if you're generating interest, like BlockFi or like DeFi, you may have some regulatory risk. And if you're a governance token, you may have some regulatory risk. And if you use an NFT in a way that you disseminate income, like you say, if you hold this unique, NFT, then you're able to have the rights to income, then that could potentially look as a security. But everything else, pretty much isn't a security. I mean, if you have a token and it's doing something for a distributed, decentralized network, for the most part, you don't have much regulatory risk. In my opinion, hypothetically.
Yeah, thank you. And one example that has caught my attention right now is Terra Luna as an example of something that was under scrutiny. I think Don Kwon was even subpoenaed. And then he said, well, I'm not in the US, I'm in Singapore, and I'm a Korean, so you can't touch me right now. And if you continue, I might just dissolve the company, so there is no central part anymore, and just go fully decentralized software. Then basically we are untouchable. What do you? Is it possible they just decentralize it and then it's a real autonomous entity? What's your take on this? Do we have examples in history of this?
Yeah, that's right. This is new. This has never been happened before, but there's nothing in past regulations. If you don't have a company, you become a decentralized autonomous organizations, and nobody in that DAO is a US citizen, then I don't see how there is there is no regulatory body under which that would have purview to my knowledge. And so that's again why in the age of autonomy, it's going to completely transform how we do business. Because if companies have regulatory risks, why would you have a company? The ultimate thing you learn from all these books is that you want to have 100% control and no ownership. You don't want you want all the good, you want all the money, all the assets. You want none of the bad. You want none of the taxes, none of the liability. That's effectively what the world has created in its efforts to create law and to have rule of law and to have countries that are run by rules. Generally speaking, that whole incentive system has created such that you want to have the most control and the least amount of ownership, because ownership automatically gives you rights and responsibilities, and you want all the rights and you want none of the responsibilities. I mean, that's the what so of it. And so that pulls us to then want to create human organized organizations and to organize in such a way that we're not companies, we're DAOs. That's not, there's no legal thing of that yet. There may be in the future, but it's a new thing.
Fascinating. Thank you for sharing this. And so everybody, go get his book. It's Crypto Assets, Investing in the Age of Autonomy. The author is Jake Ryan, and it's really such a good practical book. We cannot cover that in half an hour, but you see how deep the topic and how relevant this is. And it's a really practical book. Jake, who should be my next guest?
Yeah. Who should be your next guest? Well, I don't know. Maybe you want somebody in crypto?
You name it.
Maybe Tom Shaughnessy of Delphi Digital. He runs a podcast. He's a very interesting guy. I don't know. Try
I
him.
love Delphi Digital. I get their newsletter, these beautiful data visualizations that they do.
Great.
Amazing
Their
stuff.
subscription, their service, it's really great. He's very smart. I bet he'd be an interesting guest.
I love this. And if people wanna find you, where do you hang out? Where can they find you?
So on Twitter, I'm at TRADECRAFT Jake. If you want to know anything more, I would go to ageofautonomy.com. There you can get my book, my written or my audio book. You can get my podcast, which is the Age of Autonomy podcast, where we walk through each chapter of the book in an episode. Or you can get my weekly newsletter, my Substack, which you can get at ageofautonomy.com or jakeryan.subs. Yeah, just go to ageofautonomy.com and look for the Substack or the newsletter. You can sign up.
Thank you so much, Jake, for being here, sharing your knowledge, your wisdom with us. And please come back soon.
Thanks so much. Take care.
Avoid trying to do thousands of things that doesn't work. We have 274 templates for your business success. Reach your ambitious goals with one-on-one sprint coach. We double your revenue in 90 days.